Hello, welcome to Thought Rally channel, and today's topic is on dividend investing. In this video, we will delve deep into what dividend investing is and how it can benefit investors who are looking for consistent returns. We will also discuss the various benefits of this investment strategy. So, what is dividend investing? Dividend investing is a type of investment strategy where an investor buys stocks or other securities with the purpose of receiving regular dividend payments. When a company earns a profit, it may choose to distribute a portion of those profits to its shareholders as dividends. Dividends are typically paid out on a quarterly or annual basis, and the amount of the dividend is determined by the company's board of directors. Dividend investing can provide investors with a consistent and reliable source of income, as well as the potential for capital appreciation. Many companies that pay dividends are established and financially stable, which makes them less volatile than non-dividend paying stocks. This can be particularly attractive for investors who are looking for a way to generate passive income while also minimizing risk. When an investor reinvests their dividends, they can purchase additional shares of the company's stock, which can lead to an increase in the amount of dividends they receive over time. This can be a powerful tool for long-term wealth accumulation, as the earnings from reinvested dividends can compound and grow exponentially over time. Here are the benefits of dividend investing. Number 1. Reliable income stream. One of the key advantages of dividend investing is the ability to generate a reliable income stream. Dividend-paying stocks are an excellent option for investors who want to earn a steady stream of passive income. By investing in companies that pay regular dividends, investors can receive consistent payments that can be used to supplement their other sources of income. Dividend payments can be particularly attractive to retirees who are looking for a reliable income stream to support their retirement lifestyle. These investors may be less concerned with capital appreciation and more focused on generating steady income from their investments. Moreover, dividends can provide a buffer against market volatility. Even in a market downturn, companies that pay dividends will often continue to do so, providing investors with a reliable source of income. This can help to offset losses in other parts of an investor's portfolio and provide a level of stability in an otherwise uncertain market. It's important to note that not all dividend-paying stocks are created equal, and investors should conduct thorough research before making any investment decisions. Companies that pay high dividends may not always be the best choice, as these companies may not be financially stable or may be paying out more than they can afford. A balance between dividend yield and financial stability is essential to ensure that investors are receiving a reliable income stream while also minimizing risk. Number 2. Low volatility. Another benefit of dividend investing is that it can provide investors with a lower level of volatility compared to other types of investments. Companies that pay regular dividends are often established, financially stable, and have a history of consistent earnings. This can make them less vulnerable to market fluctuations and economic downturns, which can lead to less volatility in the stock price. Moreover, dividend-paying stocks are often from mature, well-established companies that operate in industries that are less susceptible to economic turbulence. These companies typically have a large market share and may have less competition, which can lead to more predictable earnings and a steadier stock price. In addition, because dividend-paying companies are often financially stable, they are more likely to maintain their dividend payments even during market downturns. This can provide investors with a level of stability and income during times of market volatility, which can help to offset losses in other parts of their portfolio. Number 3. Compounding. Another significant advantage of dividend investing is the power of compounding. When investors reinvest their dividends back into the same stock, they can purchase additional shares. This can lead to an exponential increase in the number of shares owned, which can result in an even higher dividend payout in the future. Over time, the effects of compounding can be significant, and investors who reinvest their dividends can benefit from the growth in both the value of the shares and the income generated by the dividends. You're essentially putting your money to work for you and allowing it to grow exponentially over time. This can result in a powerful long-term investment strategy that can help investors achieve their financial goals. Of course, it's important to note that there are risks associated with investing in any stock, including dividend stocks. Again, not all dividend stocks are created equal, and some companies may struggle to maintain their dividend payments over time. Therefore, it's important to do your due diligence and invest in companies with a strong track record of consistently paying and growing their dividends. But for those who invest wisely and hold for the long term, dividend stocks can be a powerful tool for building wealth over time. Number 4. Inflation hedge. Inflation is the gradual increase in prices of goods and services over time. It erodes the purchasing power of money, making it essential for investors to protect their wealth against inflation. Dividend investing can serve as an excellent inflation hedge because many dividend-paying companies have a history of increasing their dividends over time, which can help to offset the effects of inflation. Moreover, because dividend payments are typically based on a percentage of a company's earnings, they may rise with inflation as well. This can provide investors with a reliable and growing income stream that can keep pace with inflation and help to maintain the value of their investment portfolio. Number 5. Diversification. Diversification is another advantage of dividend investing. By investing in dividend-paying stocks across different industries and sectors, investors can spread their risk and reduce the impact of market volatility on their portfolio. This can help to protect their investment from unexpected events that can negatively impact a particular company or industry. Furthermore, diversification can help investors capture opportunities in different market sectors while still receiving a reliable income stream from their dividend-paying stocks. This can lead to a well-balanced and diversified portfolio that can generate income while reducing risk. So, dividend investing is an investment strategy that can provide investors with a reliable income stream, low volatility, compounding, inflation protection, and diversification. However, it's important to conduct thorough research and consult with a financial advisor before making any investment decisions. So, if you're looking for an investment strategy that can provide you with consistent returns and reduce your overall investment risk, dividend investing may be the right choice for you. Thank you for watching today's video, and we hope you found it informative and helpful in your investment journey. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more content like this.